is what I wanted to focus in a little bit more today, because I think it offers a really interesting contrast to a lot of the stories that you hear about in FinTech day to day. Asia, as I mentioned, it hasn't always been a huge story. It's been growing, and as we see with Ant, there are these occasional blips on the radar. This is kind of texty, but it lists a couple of the examples of the stories of FinTech in Asia that have really just exploded. They're kind of a bit old now. Money market funds that have exploded overnight, new payment systems that have become used by millions of people. I think one that was really the huge example was Ant, you mentioned a few times, and just to take a moment and talk about how quick it did go on. It was spun out of Alibaba in 2014. It got 450 million users worldwide, and if you look at how its financial services are being used in China specifically, there's 140 million people in the rural areas alone who it's reaching that financial services couldn't reach before. So yeah, they did their first round with a value at 45 to 50 billion, and they raised 4.5 billion, which is what you see mentioned right here. Incredible. We don't see numbers like that in North America on any front. The other thing that's really incredible about Chinese FinTech is it's not working the same way of unbundling financial services that we see in the rest of the world. They didn't have the same sort of legacy systems and big established brands in the same way. Instead, you have this huge population that could be tapped with technology, and it was ready for it. So what you see here are three of the bigger names, and when you look across the names of all their sub-platforms and solutions that they offer, it covers the whole spectrum. So it's a completely different landscape when you go over to China and Asia. Yeah, really pretty straightforward. I don't want to spend a lot of time on that. I think you can see it. What is pretty cool is seeing, coming back to digital ecosystems and neobanks and all the rest of it, this is actually starting to scare banks in the US. And here's a really quick take on it.
In China, people use mobile services owned by Alibaba and Tencent to do almost everything. They chat, shop, send money to each other, and even make purchases in physical stores. And the country is becoming cashless. So here's the scary thing for American finance executives. The banks never get a cut. In fact, many Chinese don't even have bank accounts. China is among the growing number of countries showing that payments can happen cheaply and easily without banks or credit cards. In contrast, US consumers still rely on banks for most of their purchases. Even mobile payments made through apps like Apple Pay, Uber, or Venmo are tied to users' cards or bank accounts. That all adds up to a feast of fees for many of the companies that handle and process payments. For a typical $100 credit card purchase in the US, $97.25 goes to the merchant, and the rest is split between issuing banks, payment processors, the merchant's bank, and card networks. Those small slices add up to billions of dollars for banks every year. If apps were to grab market share in the US at roughly the same rate as they have in China, banks would lose a projected $43 billion in revenue from one of their most profitable businesses. If payment apps were to replace paper money and offer alternatives to regular bank accounts, as they increasingly have in China, other sources of income could take a hit. Checking accounts alone generate $3 billion in bank fees in the US. Whether or not you have access to a bank, being able to make and receive payments through your phone is an obvious advantage, as Alipay and WeChat Pay have demonstrated in China.
So I thought they did a pretty good job of summarizing that, and it's amazing how they visualize it pretty clearly there. It's not just that these are new competitors, they completely eat up large chunks of the bank's business. Pretty compelling in how they do it too. In China, it's a little bit easier to get it adopted. I'm going to skip this slide. In Asia in general, I would say the conditions are much better than they are in North America. And there's 3 points I really focus on in terms of why, but I think the trend follows through here, and it offers a lot for our future as well. It's a young population. People expect digital technologies there. It's an emerging market where the financial system and the infrastructure is being created, not being replaced or defended, and they have large populations. You heard that 140 million in rural China. I mean, it demands a technology solution. You can't serve it in other ways. So that's really why conditions are perfect in Asia for FinTech. It's something we always say to Swiss companies as well, is don't forget markets like this. They're growing. They have an increasingly large middle class. It's a huge opportunity if you can figure out a very small segment in somewhere like China or India, compared to figuring out a huge segment of the Swiss market, which is tiny. So well worth considering when you're building a business. Well, thank you everybody. I hope you enjoyed it.